Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, January 25th, 2022. And our top story today, global ETFs reach $9 trillion in 2021. Well, joining me now to discuss this and a lot more, Sylvia Jablonski is a co-founder and the chief investment officer for Defiance ETFs. Sylvia, it's great to see you again. We were chatting before. It's been a while. Thanks so much for joining us on the program this morning.
Yeah, thank you so much for having me. Excited to be here.
Yeah, it's great. And I want to get, we're going to go all over the place with ETFs, and you and the folks at Defiance are doing some really interesting things around thematics and the different sectors. But let's just talk about the growth of exchange traded funds, because they have just done phenomenal. Even pre-pandemic, they were growing at a very exponential rate.
Yeah, absolutely. You've seen trillions of dollars flowing into ETFs last year, versus the billions that went into mutual funds. So what that tells me now is that ETFs are very much here to stay. I mean, they've been around for a really long time, but they've really become the product or the vehicle of choice in terms of getting access to broad-based indices, different, thematic trades, whatever it may be. And I think the reason why is because ETFs are so sort of user-friendly and efficient. So, they reflect the real-time price of the securities or the index that they track because you have intraday trading. So, it's not just sort of like a mutual fund where you get that end-of-day NAV strike and, you don't sort of see that premium discount opportunity throughout the day. That's a great, attribute of trading ETFs. And another thing about ETFs is, now there are so many of them. And the good thing about that is that they've become cheaper and cheaper and cheaper in order for ETF providers to compete. So what that means is that, the end retail trader client, whether, he or she is looking to put them in a retirement account or looking to buy them in a trading account for themselves or for their kids, the fees, the days of the 2% mutual fund fees are gone. I mean, most of these things are under 1%, give or take, some sort of complicated types of sectors that are expensive to actually track. But, they're cheap, they're efficient, there's an ease of trade there. And, I just expect the global growth to continue.
Yeah, and they're so easy to understand. You do not have to be an investment professional like yourself to really understand how they work. And by the way, they're tax efficient too.
Mm-hmm. Yeah, absolutely. The ETF provider can deliver out, sort of like the lowest tax assets on the creation redemption function to keep them tax efficient. But, the other really cool thing about ETFs is actually that, now there are so many this year too. We were talking about this a little bit before we got on here too. COVID has just changed everything, right? And with COVID has come a lot of new, cool, disruptive technology into the markets. There's come this, there's been this massive growth and interest in cryptocurrency over the last couple of years, and NFTs and, things like psychedelics and electric vehicles and, all of these new disruptive types of sectors. And the cool thing about ETFs is if you're an investor and you believe in themes, but you're not necessarily, use psychedelics as an example, a stock picker of psychedelic stocks, an ETF is a great way to get exposure to a theme. And same with EV, whether it's Tesla or Ford or, whoever sort of your pony in that race, it's hard to pick who the winner is going to be, but we know the space will grow. So, the evolution of ETFs giving retail clients and, sort of retirement accounts access to these cool, innovative, disruptive sectors has just also been a massive benefit to the market and to the products.
Yeah, you mentioned psychedelics. The only psychedelics I know is when you say that, I think of the Grateful Dead, which is my favorite rock and roll band. Let me ask you about themes. And Defiance, as I mentioned, you're doing a lot around a lot of different themes. You're building new products, but we've got a lot of inflation, so a lot of consumers out there facing gas prices, right? Supply chain issues. But what are some of the key themes where you're seeing the greatest growth, or maybe thematics? Where are you seeing the greatest interest from investors?
So on our side, it's actually a great question and a great point, because I think when you think about themes and the themes that we see and sort of believe in, they're themes for the future. They're the next 5 to 10 years. So, we really don't care that the NASDAQ is down today and we're in this sort of what I believe was going to end up being a sort of short correction blip, but that's another topic. These are long-term themes. These are things that you want to sit in your portfolio for a really long time. They're things that are going to play out over a long time. So the way that we view the world is that, there is essentially trillions of dollars worth of wealth sitting with baby boomers and sort of beyond. And it's going to slightly trickle down to, whether it's younger Gen X, millennial, Gen Z, and beyond. And these are the traders that have entered the market in the last couple of years in mass. And they are the traders that are going to be in their 30s and 40s in the next decade or so. And I don't think that they're going to care so much about, the classic asset rotation, sector rotation types of strategies that, perhaps our parents and grandparents cared about. You have sort of like XYZ portfolio, use these products to plug that in and let that run. So for example, they will care about the future of communications, but in their minds, that the sort of younger generations will think about things like 5G, because 5G is going to change the way we communicate, but it's also going to be a major player in the metaverse, for example. Computers, the IBMs and the Dells or even enterprise software, things like Cisco of today. Well, maybe they'll be the companies of the future, but sort of why and what other companies would make up that theme? And in our minds, that would be something like machine learning or quantum computing or big data. So we create products with access to those types of themes. And, going back to psychedelics, while one of the biggest issues in the country and globally is depression and PTSD. And we've just seen and heard for years that a lot of, over-the-counter sort of depression drugs have failed 30% of the mental health patients out there. And there are all these trials being done by places like Johns Hopkins and NYU and, MAPS and whatnot that show the efficacy of using, doctor-guided psychedelics to help cure and treat PTSD. So, we've given exposure to that. And other themes that we like are things like hydrogen. Eventually, hopefully, we're going to get rid of all of the sort of bad things in the earth, and we're going to get to carbon neutral by 2050. Fingers crossed. And I think a big player in that will be hydrogen. I think that's the way we sort of view the world. We look at the future of how the world will work, which things will be, of most interest to investors, which sort of themes will play out. And we try to create ETFs that, target those types of themes and industries. But other ETF companies are doing similar things. Like I think ESG is a major theme that investors are interested in. The environmental, social, governance aspect of how companies operate. And you just see, billions of dollars flowing into those types of products too. So there are a lot of cool and new thematics out there. And I think that inflation in the short term is really just creating this massive buy on the dip opportunity to get into them.
Yeah, and I love the fact, and I've got to go to a commercial break in a minute, but just one last question. I love the fact that you're mentioning 5 years out, 10 years out, 20 years out, because long-term investing is really where wealth creation gets created. That's where wealth gets created. It's a long-term commitment. And I wanted to just, you mentioned a lot of the younger people, unfortunately, a lot younger than I am. I want to get your thoughts around the meme, two things, meme stock, and we can maybe you'll just do a minute and we'll carry it over. But okay. The meme stock investing, AMC, GameStop, and then also cryptocurrency as an ETF. Just real quick, a minute, and we'll carry it over till the next segment.
Okay, love crypto. We can definitely dive deeper into that one. I love crypto, great asset class. I'm glad that there are ETFs and it's sort of democratized access for retail traders. The AMC thing, I think these companies are kind of like DOA and digging themselves out by doing cool things like participating in the metaverse and accepting Dogecoin and trying to liken themselves to crypto. So that's my 2 cents there.
Yeah, well, let's take a quick break and we come back. We'll talk more with Sylvia about the future of ETFs and a lot more. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking this morning to Sylvia Jablonski. She's Chief Investment Officer and co-founder for Defiance ETFs. I really like that name, by the way, Defiance ETF. Sylvia, thanks so much for staying with us this morning.
Yeah, great to be with you here today.
Yeah, it's fun. And like I said, I like the name Defiance because you're almost like defying the trends and the status quo. And I'm a big fan of that. Disruption's where it's at. All right, let's talk about, we went a little bit into AMC, GameStop, but I want to get your thoughts about a potential for a spot ETF for Bitcoin. Right now, I think you're buying shares in futures. It's not directly the crypto itself. But where do we stand with that? I mean, is SEC Chairman Gensler and the SEC going to give approval eventually to an ETF?
Yeah, so I'll give you a quick comment on Defiance for your viewers out there. If you've ever seen the movie Defiance, it's about two brothers who rescued well over 1,000 Jews during the war, and those two individuals are the grandfather of our original founder, Matt Belsky. So the movie Defiance is about his family. So just massive history and legacy, and heroism to live up to, and that's why he kind of honored the family with Defiance. But it absolutely also fits our personality, our product suite, and all that. So it's a big thing we're trying to do to sort of honor that family in our mission to launch ETFs too. But just a great, cool story there. So in terms of crypto, there are a few ways to buy crypto. You can actually buy crypto. You can set up a digital wallet. You can buy Bitcoin. You can buy Solana, Polkadot, whatever it is in your Coinbase account or whatever it is that you use. Or you can use, you can buy a trust, which is like a Grayscale or a Bitwise product that's listed on basically OTC products. They're set up as unit trusts. And the third thing is there are two approved ETFs out there that actually track the price of Bitcoin through the use of futures. So ProShares has one and Valkyrie has one. So my 2 cents on this. I think, first of all, I think that it's great that we have this range of products, and I like them all for different reasons. I think that, in a retirement account, for example, I can't think of any that allow you to actually buy cryptocurrency directly, right? So you don't have that option. And, as far as I know right now, to get access to crypto in a retirement account other than buying the ETF or perhaps the unit trust, but I think it's more or less the ETF that's approved on some plans. So So that's great. It gives you access to this product. There's an ease of use too. So if you're sort of not someone who's savvy with digital wallets and vaults, and you don't want that 26 letter code, a character code, and kind of worrying about the whole process of setting it all up, then I think using the Bitwise Grayscale ProShares products is also just awesome. There's an ease of use and efficiency. But if you are savvy with all of those things and you want cryptocurrency exposure, buying the cryptocurrency directly is still the best way to go, only because there's no sort of drag on the futures roll. There's no additional derivatives servicing costs. There's no capacity issue. So there's a certain amount of futures available to access the underlying price of Bitcoin right now. So if you have all of these ETFs and they grow to billions of dollars, well, at some point that fund is going to look a little bit cash heavy or whatever else they're putting in besides crypto, because crypto won't be available to invest in for that fund. So I love that you have all these options out there. And I think that there are different use cases for each one. And in terms of what would the best solution be? The best solution by far would be if you could have a physically backed asset ETF. So actual Bitcoin ETF that invests in the cryptocurrency. I don't know that is going to get approved. I don't want to comment too much about SEC decisions, but just the tone of Mr. Gensler hasn't been super favorable to allowing the physically backed asset to come out in the ETF form. I just heard him talking yesterday about sort of the worries around regulation and the amount of information and education that retail buyers have on these products, and do they know sort of how fast they can go down, how quickly they can go up, and concerns about volatility and the transparency around that versus the hype around it. So my read on his tone is it's not happening anytime soon. But the good news is that you can access the product in those other ways that exist.
Yeah, and those are great things, and that's great, because I think more people, democratization and access, whether it's cryptocurrency or ESG sustainability or other asset classes, really important. Let me ask you, in the remaining time we have, I want to ask about access to ETFs. First, how does someone get access to an ETF? And second, what about 401k plans, 403b plans, governmental 457 plans? Will we ever see a democratization there where instead of mutual funds, you can use ETFs? So let's start with, where do I access ETFs, like Defiant ETFs or any ETF?
Yeah, sure. So you just buy an ETF the same way that you would buy a stock. So if you have a Schwab account and you're buying ticker symbol, GOOG or MSFT, you simply type in the ticker of the ETF that you wish to buy. You can look it up and just buy it in your account. You can ask your financial advisor to buy it for you. But they're basically available. They trade on the stock exchange just like any other equity does. And they're available it's my knowledge that they're available on every trading platform basically on the earth, to your point, except for some of the retirement plans, right?
What gives?
Unfortunately,
what gives?
I don't know. I thought for sure. So we were talking about this before. We met 4 years ago. I thought for sure that today we'd be talking about the massive proliferation of ETFs into retirement plans. I don't know why it's taking so long. I think it's a massive disservice to investors. I think that some of the retirement plans are going in the right direction. And you can see in some cases where perhaps an employee works for a financial organization and it would be deemed risky to give them access to ETFs because they have some sort of inside knowledge or whatever. But I think for the most part, it's just old traditions hanging on strong and taking, sort of too long to change. I wouldn't be surprised if, this starts kind of opening up, because the whole world wants access to ETFs and, expensive, sleepy old mutual funds. There's some great mutual funds out there, but some of them are kind of, just too expensive and pointless to own. So I think it does it's a due diligence disservice to investors. So I think if we all start speaking up and saying, hey, we would like to trade what we would like to trade in our retirement accounts, maybe we'll be heard.
Yeah, I think it all starts. If you're a part of a 401k plan or a 403b plan, you got to go to your human resources. You got to go to your investment committee, the fiduciaries who make the decisions to explore that. And then they would then explore, how can we do this? Can we do this through a self-directed brokerage account in a plan, or can we do this through the record keeper itself? Sylvia, we're going to have to leave it there, and I hope we don't have to wait 4 years to speak again. I know we won't. Sylvia Jablonski, great to see you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Thank you so much.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to? Well, drop us a line, and don't forget, for all the information, all in one place, in lifestyle, wellness, finance, tech, so much more, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or check out our latest content? Well, visit our website and, of course, our streaming partners like Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with those changes.
But if you're tired of the same
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.